Hello everybody, welcome to this week's technical analysis video as we go over the data sets and everything. Now, with that said, we'll be going over the data sets for the week, the earnings, and going over the SPY technical analysis. I do stream Monday, Tuesday, Thursday, and Friday. I know the stream schedule has been a little shoddy over the last couple weeks. I have not been feeling the greatest. But with that said, let's go into it. This is for the week of August 3rd, 2026, and let's jump right into the data. Alright, so we have a fairly modest week in terms of the data sets until Friday. Friday has a ton of data all coming out at 8:30 a.m., okay? But for Monday, we have the ISM manufacturing data. This is fairly important, but I look forward towards the non-manufacturing side more than the manufacturing side. So while we can be seeing a little bit of, movement from the market depending on what these data sets give us, they're expected to come in a little cooler. The manufacturing PMI is expected to be slightly hotter. So we'll see how that works out. But generally, these don't move the market too much. Now for Tuesday, we have the JOLTS job openings. That's always very important. The forecast is showing a large, pull down in that data, which that's kind of been the trend for the JOLTS job openings for probably the last 2 years now. So nothing surprising about that. And that's at 10 a.m. on Tuesday. For Wednesday, we have somewhat of a busy day. We have the ADP non-farm employment change for July, and they are expecting and forecasting a much uh, a highly reduced amount compared to the previous month. So that is important. That might move the market quite a bit. We'll have to see about that. But at 10 a.m., we also have the ISM non-manufacturing data. This is the data that's kind of crucial for me. They're showing the ISM non-manufacturing PMI expecting to come in slightly hotter. We'll have to see what's going on with that. But I also look forward to the ISM non-manufacturing employment. Okay. They don't have a forecast on that just yet, but we will talk about that when the time comes. On Thursday, really not a whole lot going on. Basically just the jobless claims. We do have unit labor costs. That's somewhat important, but in the grand schemes of the data sets coming on Friday, it's really not that crucial. And we also have the non-farm productivity, which that's always important. The forecast is showing basically double compared to last reading, so we'll see if that's true or not. Now, Friday's a really big day. Okay, so Friday we have the hourly earnings, we have the non-farm payrolls, we have the participation rate, we have the unemployment rate. Now, remember with the participation rate last time, we saw basically, I don't remember the number off the top of my head, but close to 750,000 people exiting the labor force. So that's a really big deal. We saw the unemployment rate tick downward, or I think hold the same level. Um, but that doesn't tell us a really good story because a ton of people left the labor force. Okay. And we also had the U6 unemployment rate tick downward, which that might seem like a good thing, but that's overall showing that there's less people wanting to be in the labor market right now. So it would actually be good at this point to see the U6 increase, but very important data sets, especially the hourly earnings. I'm looking forward to that quite a bit. The non-farm payrolls, they are expecting to show a slightly higher rate compared to the prior meeting or the prior data set. Um, but kind of just based off of everything we've been seeing, the ADP that comes out again on Wednesday at 8:15, they are showing you know, a heavily reduced rate. So I do think the non-farm payrolls will be coming in cooler. I don't know if it'll be coming in as low as last time, but I do expect it to be less than this 88,000. Now there's the New York 1-year consumer inflation expectations. I don't really care a whole lot about that. I don't think the market's going to care a whole lot about that right now. But that's the data, so let's get into the earnings. Now there's a ton of earnings going on this week, but there's only four that I'm really interested in. There's Palantir on Monday after the close. On Tuesday after the close, there's AMD, which is Advanced Micro Devices. On Wednesday after the close, there's SanDisk, which is super, super important right now. And then on Thursday, there is Cloudflare, or, the symbol is net. So those are the four that I'm really interested in. They each have the implications to be able to absolutely push the market or pull the market down. Primarily AMD, uh, but again, all of these are very, very large companies and can definitely damage or rally the market. So make sure you're paying attention to those. There's quite a bit in here that I actually am trading right now, like Merck and Company, uh, playing that. A couple others, DraftKings, I'm trading that right now. TTD, I'm trading that right now. So just a whole bunch in here. Um, but again, it's mainly those four. These other ones shouldn't really move the overall market too much.
Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video.
And getting into the technical analysis, let's start with the daily time frame, and we're going to look at the moving averages. So last week we did have, a very, very, very volatile week. We saw the 725, it shows 729 in here, but we did pull down to the 725, and we did pull up to the 749. Okay. Basically, we had a $23 move over the course of 3 sessions, which is kind of absurd for the SPY. But with that said, we are still seeing our moving averages being fairly bearish. Okay, we still have the 5-day moving average, the 5 MA, underneath the 10 MA, underneath the 20 MA. Now, we've been seeing this 20 MA failing to cross over the 50 MA, and that could be a signal for a very large bounce, or that could be a signal that it's getting ready to pull those moving averages under. So if we start selling into the early few weeks of August, that's absolutely going to be pulling that 20-day moving average underneath the 50-day, which that is very, very bearish. And I do kind of just want to state this is that usually the months of, August to October are usually fairly bearish. Okay, so it's very hard for me to be bullish during this time, even if we do see some bullish price action. We would be needing to see all of the supports crossing above not just the 50-day, but the 20-day, and start really pushing upward. And not just pushing upward, but breaking this 750, 845, basically the all-time highs, which we can do. Okay, we are starting to form potentially this cup and handle in here, and I do think we have the price action to potentially get us there, along with some of these major earnings still. Now, we did see the yen start doing or start having an intervention as of last week. And let's go ahead and jump to the USD JPY really quick. Now, over the course of 2 trading sessions, we saw the yen, strengthen basically to a high over the last 3 months time frame, just over 2 sessions. Now, I know a lot of people are thinking, oh, this yen intervention isn't really doing much right now. But that's not true. Okay, they are starting with selling US Treasuries, and the way we know that is we can just pull up TLT here, and you can see some massive, massive selling going on in TLT. Even though there has been massive selling going on in TLT, the last couple days have really turned up the pressure. But usually the Bank of Japan starts with selling US Treasuries first. After they sell the US Treasuries, that's usually when they get back into selling US equities, crypto, things like that. So if the Bank of Japan is going to be continuing intervening and trying to strengthen the yen, that's something we have to potentially contend with. And this is the time of year that they do it. And the reason why they usually do it this time of year is because we don't have any FOMC meetings for August. The Fed chair is always going to the Jackson Hole Symposium. So the conditions for things to be very bearish, I still think are very present. Now, going over the Bollinger Bands, and usually I'd do this with the moving averages, but I'm going to try to do this without the moving averages this time, is that we did pull down to the lower Bollinger. And as you can see, each time we pull down to the lower Bollinger, it usually creates a very large move to the upside. However, we need to be securing higher highs at this point. Okay, technically we still haven't beat this support range, or this resistance, excuse me, at the 750. We haven't beat this resistance at the 755.95. So until we start pushing higher highs, I would be very reluctant to get overly bearish on or overly bullish on this. Now, kind of the same, opposite side of the coin being bearish too is that we can see a deviation from the standard where we do see a bullish month of August. Okay, that's absolutely in the cards, especially with how adverse of a bounce we had over the basically the last week. Um, but we do need to be pushing newer highs to really solidify that this move is going to really take us up there. Alright, now I'm going to turn on the drawings and it's going to look like a mess for a little bit, but we will get through this mess together. Alright, so kind of just defining everything first. Over the last basically month, we've been seeing the SPY trading exactly within this selling channel. The selling channel bottom was actually pulled down to that point, and we're sitting between that range almost to a T. But then we saw expansion of that channel. And the reason why we saw expansion on the channel is because we did pull down to that 725, which broke underneath that selling channel. However, and this is kind of the caveat to it, is that that could be creating a new buying channel. One thing that we always consider is that when a channel breaks, usually a new channel is forming. So potentially this is a buying channel forming. Potentially this is a consolidation channel, which again, consolidation basically means that it's range bound, trading within almost a straight line. But this could also be expanding this selling channel to the upside. So if we see continued selling pressure into the rest of the month, um, that could be very telling that we're going to be continuing this selling channel downward. Now, with that said, with these channels, I wish I could hide them, but I can't. Um, we have this major resistance range, and this is between the 755, um, basically 755.64. I don't have the bottom price exactly, I do apologize. And then up to the all-time high. Okay, each time we hit this range, we see major selling. Okay, so I just kind of want to solidify this. Each time we hit the range, major selling, major selling. Almost get up to that range, major selling, major selling. Okay, now if we do pull up to that range again, we have to heavily consider major selling. Now, the one thing that is a little different, and these candles aren't showing it properly because no, we didn't pull down the 716.58 in this range. We actually pulled down to the 7, I believe it was the 726, might have been that 719. It was a 719.38, okay, which means that the selling has basically been getting stronger and stronger. This may not look like stronger selling, but we're selling for nearly a month straight. Okay, we did have a little bit of buying action in there. Um, but this is showing weakness in buyers overall. Now, going down to the ADL, that's basically the cash inflow and outflow, the symbol. we do see that holding true. Over the month of July, it pulled up slightly and then basically down, 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 down. And then over the last couple trading sessions, we did have it pop back up again. So if we continue seeing the ADL climbing, then that's saying that investors are pouring more money into the SPY. If we see this start to take a hit, then that's saying that, investors are taking their money out of the SPY and, over the out of the overall market anyway. So these red resistance ranges, these are something we'll talk about kind of in the daily recap videos and daily analysis videos, but those are major resistance ranges that we need to be watching. This one at the 746 I can actually delete. But we did hit this 748.70 and we had a really hard time breaking through it on Friday. We did pull through it very, very slightly and then started rejecting it at that point. So essentially what I'm trying to say is that the next 1 to 2 weeks are going to be very important. Okay, if we continue seeing rejections, and this is the 4 hour time frame now, shows things just a little more easy. But if we see continued rejections of these resistance ranges, and if we see buyers continue to weaken in here, then that's going to be a major concern. Okay, and very likely concerning enough to pull us back into the selling channel. Now, again, there's a lot of reasons for the next couple months to be selling off, but primarily, we don't have an FOMC this month. This gives investors a whole 2 months to be pricing in what's going to be happening with the yields or with the interest rate decision come September. Now, last I checked, the odds of the um, Fed keeping the rates lowered and basically paused was like 30%. Very, very low at this point, okay? And almost each and every session moving towards that meeting, we're very likely going to see that percentage chip away, okay? Unless we see a major shift in the sentiment overall, if we see a major shift in the data sets, that can change that. But so far, investors are heavily pricing in a rate hike for September. So leading up to that, and again, the last rate hike we had, I believe was either March, April, or May of 2023. So it's been, multiple years. Okay, the market was trying to break away from having higher rates. And we were on that course until the conflict in Iran started. And with that conflict in Iran starting, it, heavily elevated the yields again. And we're at the point where we don't know how long this conflict's going to last. Now, I know there's been a little bit of speculation, and I know Trump did talk about it earlier on Saturday this week, or last week, excuse me, where they're basically going to try to make a very, very quick deal with Iran, or else they're going in. We saw some of the Middle Eastern countries ask the United States to not start the conflict or, not start military operations just yet. But I don't think that's going to last very long. Again, this conflict is kind of all over the board. Either we're going to be getting that ceasefire and having a real peace deal at this point, or we're basically going to be having a full-on conflict. Um, Now, again, I can't say too much, but I have been hearing that there is the potential for boots on the ground. Okay, I'm not happy about that. Trust me, I'm very unhappy to even have to say those words. I hope we don't get to that point, but I think we're at the point of the conflict that this is becoming a very real possibility. Um, and I know Israel is absolutely willing to go that far as well. Okay, so we're still up in the air about the conflict. And with that being said, that can be both a very, very bullish catalyst or an absolutely terrible catalyst for the market. Okay, if we do see boots on the ground, if we do see this conflict basically start really ramping up, that could be very, very bearish for the market because that's basically the difference between us having paused rates and having the interest rates and yields cooling down versus now things are going to be spiking up. We're going to be seeing prices spiking up. It'll be harder for things to get shipped because of oil prices and just the whole 9 yards. So the market is seeing a lot of indecision. And we saw that with the FOMC last week, is that moving into last week's FOMC, I believe the odds were 70-30 in terms of whether the market assumes we're going to have that pause or the rate hike for last month. And those were very, very large odds. Okay, usually the odds leading into a meeting is closer to like 90-10, might be even 91 to 9, something like that. But this is showing that there's a lot of indecision in the market, and it makes perfect sense. With this conflict going on, there's a lot of reasons to have that indecision. So that's my spiel about that. I think that we're kind of in, I don't want to say uncharted waters, but we do need to see what's sitting underneath the boat at this point. So, with that said, I can't be too bullish this week. We do have some bullish structure going on. Okay, we absolutely do. I'm not going to, sugarcoat that just because I might have a bearish bias right now. But we do have this potential inverse head and shoulders playing out, which, if that's the case, we should be bouncing up quite heavily. But we also have, again, this very, very, very bearish potential for this inverse cup and handle. And if we're going to be seeing that playing out, then we should be expecting that 719 fairly soon. I wouldn't say exactly this week. It could be this week, might be next week. But if we see a continuation within this bearish price action, then that's the next level I'm looking for. And then some of these other levels underneath that, I think will start being targets as well if we see that downside. So that's 713.15, the 706. But on the upside of things, if we see continued buying, this selling or this buying channel will expand to the upside. I don't know why I haven't edited this yet. But this buying channel will expand to the upside. It will open up. It will take us to this resistance range. And potentially we see this resistance range broken. And if we see that resistance range broken, we can kind of expect a large cup and handle or some form of structure like that. And then all of a sudden, we're going to be seeing the 760 to 770 um, during this month, which is, again, usually a bearish month, right? So I think it's kind of, I don't want to say a coin toss, but there's the potential for major moves on both ends at this point. It wasn't like during July where we were very, very heavily within the selling channel. The price action was trading to that almost to a T, and the expectation could be, you know, we're just basically going to be following this channel until we get a break. Well, we finally got that break, and now we need to see what's going to happen from that. Are we going to be seeing an upward expansion of this selling channel, where we see something, like this, something like that, where we then expand our selling channel further? Or are we going to be seeing this selling channel basically break open and us continue buying upward? So that's the expectations for this week. I am going to be trying to stream the days that I usually stay. I do apologize, everybody, that my health hasn't been so good and I haven't been able to fully commit to that. Um, if I continue to see the weeks being like that, where I can't commit to streaming 4 days a week, then I'll probably change the streaming schedule until I start feeling a little better. But thank you so much for watching. If you do like my videos, I would love if you could share it with a friend, like the video, comment, anything else, anything that can help, um, kind of get my videos out there. I've been struggling to kind of market myself for a very long time. Again, my health is not very great, so it's very difficult for me to get a lot of this marketing and stuff done. And I'm not wanting to really have to pay someone to do that for me right now. This is something that I'm really proud of. I've been working very hard on it, and if I can build it up myself, that'll be kind of what my expectations will be. Um, but yeah, with that said, thank you so much for watching the video. Thank you so much for subscribing, and I will talk to you either in one of the streams or in one of the daily analysis videos. So take care, everyone, and let's have a great week.